People don't like to even think about life insurance, let alone buying it. But the reality is, the vast majority of financial planners out there recommend that you put some form of life insurance in place so that if something ever happens to you, your debts can be paid off and your family can survive without going through a financial calamity.
Life insurance, you should get it. Now,
and in this video, I'm going to show you a way to ease that pain a little bit by showing you how the average person can save approximately $3,000 on life insurance. Before I get into it, please make sure you hit the like button, hit the subscribe button. It really helps with the YouTube algorithm, and as a token of my appreciation, here is a picture of a bunny eating a strawberry. One of the most common pieces of advice when it comes to buying life insurance is to buy a 20-year term life insurance policy. And the reason a lot of advisors say this is because, number one, it aligns pretty well with the mortgage, right? By the time 20 years is up, the mortgage is almost completely paid off. The other thing it lines up with is after a 20-year period, the children are going to be growing up and hopefully out of the house, so you don't really have people to provide for anymore. So that is why advisors most commonly advise a 20-year term policy. But what if there's a way to save you some money by doing it a little bit differently? I'm going to show you that right now. Another strategy that you can use is something called a Term 10 policy. And the reason you might want to go with a Term 10 policy is because typically after a 10-year period, a good and substantial amount of the mortgage has been paid down. And it doesn't cost quite as much to raise your family. So instead of maybe needing $1 million, for example, in a Term 20 policy, you might only need $500,000 to get you to that finish line where the children are grown up enough to work by themselves and where the mortgage is almost completely paid off. And this, by doing this, you can actually save yourself quite a bit of money when it comes to life insurance. Let's look at an example. Let's say we've got two people. One is Hank, and the other is Bob. Hank decides to get $1 million worth of Term 20 life insurance, and it costs him $53.88 per month. This will cover him and his kids for the period until they're completely grown up and the house is completely paid off. Bob, on the other hand, decides to get a 10-year term policy for the same $1 million. Instead of him paying $53.88 a month, he's only paying $36.90 per month. And after the 10-year period, instead of him renewing at an additional $1 million, what he does instead is he buys a $500,000 Term 10 policy. And the reason he does this is, as I mentioned, the mortgage is paid off almost, and the kids are almost grown up enough to the point where they can start working. So he doesn't feel the need that he has to put in a larger term insurance policy for them. At the end of a 20-year period, Hank has paid $12,916.82 per month into this type of insurance policy, whereas Bob has only paid $9,582 into it. This ends up saving Bob $3,000 by following this strategy. Now the question is this strategy right for you? And that all depends on your own personal situation. Now, if you are someone who just wants to set it, forget it, a Term 20 policy is just fine. But if you are someone who wants to save a little bit of extra money on an expense that you don't really want to pay anyway, this could be the right strategy for you. One thing to keep in mind though is your health, right? The biggest factor in deciding whether or not to implement this strategy or not is whether or not you lead a relatively healthy lifestyle. If you are someone who drinks regularly, smokes regularly, and engages in unhealthy habits, a 20-year term policy is probably the right move for you, because who knows what could come up. If there are some health issues that come up around the time that you want to renew after 10 years, it could be drastically more expensive. But if you are a relatively healthy person and live a relatively healthy lifestyle, this could end up saving the average person out there approximately $3,000 on life insurance. Overall, this isn't a huge game-changing strategy. This isn't something that's going to make you rich overnight, but any amount that we can keep in our pockets can be used for something better and something else, as opposed to going into the pockets of the insurance companies. And for me, that's win. If you did want a little bit of extra help setting up a life insurance policy, or you wanted a free quote, make sure you click the link below. CanadianIslamicWealth.com. We're happy to help. Jazakallah khair. Assalamu alaikum.